A strong quarter for Boeing. You can say that, strong, since they beat by 28% on the bottom line. The aerospace and defense giant topped estimates. It also raised its full-year forecast. To help us break down the numbers, we welcome Jefferies senior equity analyst Howard Rubel. He is one of the most accurate analysts on Boeing in the world, making him a Bloomberg best. And he has a buy rating on the stock with a $90 price target. Howard, welcome to InsideTrack. Thanks for joining us. Let me ask first of all about the beat. I mean, 28%, really it's 28.8%. So you can round it up to 29. That's pretty amazing on the bottom line.
Well, $1.25 is probably rounded too. You know, we're not seeing what the last numbers are going to be yet. By the end of the year, they'll be higher for the year than what they've delivered so far.
So what do you think? The sales number I kind of got gigantically wrong because I was looking at the 6-month figure, but they still beat on the top line, not by as much, $16.54 billion. Analysts are in line and tend to do well, much better, I should say, estimating revenue than they do estimating EPS. Why is that?
Well, actually, it was high a little bit on revenue, and it was mostly defense. My commercial numbers were a little low. Why? I think when the turn happens on commercial, we always underestimate what can happen on the upside. Analysts
prefer to underestimate than overestimate, don't they? Because obviously 76% of companies beat earnings on average.
Oh, I don't know. I tried to be high. I was high versus the street, just not high enough. The operating leverage, when you get it going in commercial, is a big number.
I'm not saying you. I'm just saying analysts as a whole. I mean, you're one of the best analysts out there, so you get it right most of the time. Let's talk about the whole year. Boeing raising its full-year forecast to a range of 390 to 410. Now, the street was already at 411, so they're almost coming up to the street at the top of their range. What's going on there?
I think it's still under promise, over deliver. There's still some risks. The company doesn't want to create the impression that they can't run the business as well as what they can. So I think there's opportunity for better execution in the second half.
What are the big risks?
787 out the door on time. They've already scaled that back a little bit. 747 market reception, and then launching the new 737 re-engine.
These companies cannot deliver planes on time. I mean, Airbus is the same way, right?
They're getting better. I mean, all of a sudden, you're starting to see 777 and 37. Those have been bread and butter, and you can see it in the learning curve. You can see it in the margins in commercial.
So you expect those risks, you know, if we don't see them, if we get the 787, for example, in the third quarter as expected, you think Boeing's numbers are going to go up? You think the street's numbers are going to go up too? So you think 411 is still low for the full year?
We have 4.25 for the year and $5 for next year.
All right, Howard, thanks so much for joining us. Howard Rubel there from Jefferies. He has a buy rating on the stock as a $90 target on it.